55,000 global tech workers have been fired. That's the number one mistake investors make. And it is a concern. They're going to make less money. But once it starts, it becomes a snowball. All right, a lot of corporate layoffs coming, and the numbers are large for the corporations, but overall, I just read today that there was something like announced 55,000 global tech workers have been fired. Okay, guys, there are 8 billion people in the world, so 55,000 is not a lot. But it's not about that. It's about understanding why they're being laid off, and is this the start of something? I have no idea. It seems to be building on itself. Now, my personal opinion was a lot of companies probably waited a little bit longer to lay people off because they didn't want to be the bad guy in the room. But once it starts, it becomes a snowball. So in this video, I'm going to discuss why you should pay attention to this, but not make decisions based on it, okay? For the next minute, I'm going to explain to you our software at everythingmoney.com and how you can use it to retire with more money than you thought possible. Do you get anxious every single time the market dips? Do you feel like maybe you're behind on your savings? Is it ever a worry that you may not have enough money to retire? If you've answered yes to any of these questions, then our software is absolutely perfect for you. With these easy-to-use tools and our community with thousands of other like-minded investors in there, you can use all of this to have better peace of mind and to understand why you are making the decisions you're making, because it's more about the emotion and temperament than it is about the numbers. And these tools, especially this community, will help you realize that and make better decisions going forward. You will absolutely be able to understand financial statements and impress your friends who still waste their money buying stocks based on their emotions and other hype people out there. So for a little over $1 per day, less than a cup of coffee, eliminate that fear from your life of worrying about your future financial state and your retirement savings, and try our software risk-free for 30 days. If you don't like it, email us, money back guarantee, no questions asked. Go to everythingmoney.com, sign up now, and change your financial future starting today. So if you like this, please subscribe to the channel. Please share it with somebody who might need an understanding of this in the future. So when I look at layoffs, I'm looking for more widespread layoffs. Now, we've been talking, and I'm not a person who thinks negatively about the economy or stocks. I believe the U.S. is still the best economy in the world. Are there issues? Of course there are issues. There will always be issues in every economy in the world. There are millions of metrics there. There are billions of people in all these economies working together. It's impossible not to have some sort of negativity. But what I look at is some major trends. And I looked at it saying, you know, when we're at 3.5, 3.6% unemployment, can it get much better? I don't think so. So what does that mean? Well, we haven't had a recession apart from COVID in a very, very long time. Now, some would argue that last year's first 2 quarters were a recession because there was negative growth, which I get, negative real growth. But we also had very, very fast inflation at the time, and it probably took a little bit of time so there's a positive I'm looking at. A lot of people would have said that's a recession. And even I said at one point, like, well, you know, this is the definition. But we also had high inflation. So real GDP growth is nominal growth minus your inflation factor. So if you have 7% nominal growth and 10% inflation, you have negative 3% real growth, right? Now, the positive to this inflation is it'll grow GDP much faster. But when people's costs are going up, it's harder and harder for companies to pass on costs immediately. So they're going to make less money. You look at these companies now, look at Google. I believe Google is laying off 12,000 people on an average salary of around $300,000 a year, with benefits and everything. That's going to save them, what is that, $3.6 billion a year? That's a lot of money. And a lot of companies are now saying, hey, we expanded too fast. We thought coming out of COVID that things were going to keep going up and up and up, and all of a sudden things started to slow. And remember, the labor market's always a lagging indicator to the economy, a lagging indicator. Now it's going to keep, you sit there, which means the economy's going to turn, and then companies are going to start laying people off. And it is a concern. But this is why we preach over and over and over again. Live well within your means, save as much as you can. If you can save 20% of your income, awesome. And obviously it depends on your income. If you're watching this right now and you make $5 million a year and you're only saving 20%, that's terrible. You should be saving well more north of 20%, okay? Now, when it comes to these layoffs, please don't start making rash decisions on the companies you own because of these. Learn a process for value investing. This is why we teach this process for value investing. This is why we use our stock analyzer tool, because we want you to come in here and make judgments about the future and see what you should pay for a company based on those judgments of the future. And don't make your assumptions for the future in the rosiest of situations. That's the number one mistake investors make. Recently it was good, let me assume those forever. Recently it was bad, let me assume those forever. Now the good news for a value investor like myself, or hopefully you, is when people are assuming the bad forever, you can take a step back and realize that and say, hey, there's a disconnect here. There are ebbs and flows to profit margin. When people are here making these assumptions forever, they're going to be wrong. When people are here making these assumptions forever, they're going to be wrong. Which wrong would you rather be? That's the question. Well, unfortunately, I'd rather be the person who goes, okay, everybody's assuming this. It means it's probably undervalued. Let me go take a look at it and see if I want to buy it. That's what I want to do. You know, I look at Netflix here. This is the company pulled up on Netflix. Profit margin's been increasing. Okay, I don't know where it's going to go though. I look at Microsoft. Is it going to go better? Google, is it going to get better? I don't know. Remember, if people aren't buying stuff, or people are buying a lot less stuff, it's going to hurt margins. It's going to hurt growth rates. It's going to hurt all these things. But at the end of the day, the economies ebb and flow. Go back to 1870, back to when I first see the data from Schiller on data on the S&P or its equivalent and GDP going back to 1870. It's 152 years. In that time, what have we had? How many assassinations? How many terrorist attacks? How many world wars? How many regular wars? How many everything? How many recessions, depressions? How many everything we could ever imagine bad happening in this world, and how much better the world get. Let's even look at it. What is the world GDP? World GDP by year. Let's see this. GDP by year. Oh, that's the ranking. So I want to see world GDP 1960 to now. I mean, look at this, guys. What's happened since 1960 to now? Per capita. This is total GDP. 1.4, I assume that's $1 trillion in 1960. And now, 96 trillion. Per capita is 12,263 from 459. Guys, that's huge. The US does 25 trillion now. Back then, the total world GDP was 1.4 trillion. What does Ohio do in GDP every year? I mean, that's what I mean. It's like, right now, Ohio would be 1% of the entire world based on going back there. This is what I mean about the positivity. Look at all, we had presidential assassination successfully here, attempted here. We had Vietnam War here. We had a terrorist attack here. We had a financial meltdown here. We had a world pandemic here. I mean, look at all these things that have happened along the way. Your cute host right here was born right there. So look at when I was born, I'm a mere 41 years old. The entire world GDP was 11.7 trillion. The average person in the world made $2,600. Now that's up 5 times in terms of per capita and up 9 times in terms of GDP overall. 8 times. That's awesome. So yes, companies are going to lay people off. We will probably have a recession at some point. It'll probably be not the best, but that's not what your worry should be. Your worry should be, are you saving appropriately? Can you live within your means? Because if you are laid off, if you live well within your means and you saved appropriately, it's a lot easier to make it on the unemployment benefits. It's a lot easier to make it on the savings that you have. It's a lot easier to make it on those credit cards that you might have zero balances on that you save for emergency purposes only. But if you live paycheck to paycheck and don't save up any money, you're going to be hurt very badly. That's why I want you to remember that's your margin of safety that you need to have. So if these companies have a trickle-down effect where all of a sudden these layoffs start to snowball, you can be appropriately handling all of these situations. And that's what I really encourage everyone to do. Account, just like we look at margin of safety in our videos for our investments, use margin of safety for your everyday life. My guess is these layoffs are going to keep going. Not because I want it to keep going, it's just likely to happen. That's just what's going to happen. And the wealth effect, as stocks keep falling, are going to make people feel grumpier and grumpier about the economy and investing in money in general. It has its own snowball effect. But luckily for you, if you follow this channel, you need to subscribe, because when things are bad, I will be talking the most positive. Things are already starting to look bad, and I'm like, wait a second, guys, this will be good for people who are investors. And that's the case. So again, subscribe, because the more you learn, the less you fear. Thank you very much.